Sampath Reddy also joins us on the show to talk to us about the fundamentals. He's, of course, the founder and fund manager at Azurian Investment Managers. Sampath, hi, good to be speaking with you. Been a while. What's the sense on metals? Because this is one space that, retail investors tend to stay away from given the moving parts it involves. But do you think Vedanta is finally coming out of the woods with respect to the debt issues being sorted out, with respect to the capex that they have lined up and that impending demerger?
Yeah, generally the metals as such have been deep cyclical kind of a companies, and currently, if you see, most of the metal prices are going through the the down cycle. Especially the steel as such has been going through the severe down cycle, and generally the commodities as such. One would normally tend to buy at a high PE and sell at a low PE. What does it mean is that today the profits are very suppressed or depressed, because of which the PE may appear to be higher, or sometimes there may not be any earnings, and and they will be generally be sold when they look at humongous profits, and at that time they appear to be very cheap in terms of PE wise. But I think from a cyclical point of view, yes, I think metals are going through the some sort of a downside, the down cycle, and maybe for a little bit of investors who have the risk appetite to with a view of playing this upcycle again, maybe the entry point is right in the metal sector as such.
Okay, that's the view coming in as far as the metals pack is concerned. But what's the view on autos? That has the street divided a bit, Sampath, because flair in consumption is missing as far as the mid segment is concerned. How are you looking at playing the auto theme, if at all?
Right. I think, automobiles is a pretty good sector. I think, last couple of months, generally, there has been a slowdown, especially the quarter two. If you see, by and large, most sectors and companies have seen a bit of a slowdown in the demand. I believe that will be a temporary phase. And if you look at them, especially the auto OEMs, whether it is in the passenger cars or two-wheelers, or even in the UVs and, tractor side, all the OEMs are, exceptionally, in a good companies with a very high return on equity and return on capital employed kind of ratios. And this phase which we are seeing in the last couple of months, which is slightly lower demand, I think is a more of a temporary phase. And even if you look at the threat of the EVs for the OEMs in the past, about 6 months to 1 year back, there was a bit of a concern. But I think it looks like it's basically the incumbents, which is whether it is the M&M, or whether it is the two-wheelers, their incumbents are the ones who are really getting their hands together and coming out with the models in the electric vehicles as such. I don't see a threat of even EVs for the automobile sectors as such. So overall, I think we like the sector. The current slowdown in the last couple of months we are seeing in terms of demand is I believe, is a temporary. We would like to be overweight on this sector.
You are suggesting, or at least trying to be overweight on this sector. But Naresh, if I had to ask you about consumption, and I'm looking at these QSR names, the Devyani, the Jubilant, the Westlife of the world, and even those, the snack companies, the Gopal Snacks and Bikaji of the world, all five of these names will come up for you on the screen because the stocks are, excited today. What's your view in the sense as to what's looking the most interesting of the charts?
So Gopal Snacks has done really well, even Bikaji. So for now, they're getting into a consolidation. The most interesting name is Jubilant Foodworks. The stock has been trying to make that comeback for the last 2 years, roughly. The previous high back in 2022 was 650. We went above those levels, again flipped back, and now we are back above 650. The recent highs are around 700. So the stock has gone nowhere. Looks like a possible case of momentum to continue in Jubilant Foods. Will keep a strict stop loss below 660 for this one.
So that's a view as far as the QSR basket is concerned. What else is happening in the market? Let's deep dive into some of these names. IT today is on the back foot. So Infosys is down. Wipro is retracing a bit. TCS too. Maybe after that solid rally that we had seen over the last few days. Today it's a bit of a softening of stance. And ditto can be said for HDFC Bank and ICICI Bank as well. Sampath, what's your view on these heavyweight financials? And if you had to kind of create a pecking order, let's say, between HDFC, ICICI, SBI, Kotak, Axis and all of those of the world, what's your pecking order between financials?
Right. If you see the weight of the banking sector as such has been, quite high in most of the benchmarks, whether it is the Nifty or whether it is the, 200 or 300 indices. And, given that, most of the fund managers, including us, are by and large invested in the pretty much, at least I would say, top 3 to 4 names. I mean, if you ask me, by and large, we've been liking the the larger, the larger 3, 4 private sector banks as such, and we've been invested in those names. I would be difficult to choose between the 4 or 5 top names, and by and large, it's good to have a basket of those 4 or 5 names. Even in the RBI governor also is mentioned in his speech that the quality of the banking sector is where is at one of its best in terms of asset quality, or even any other capital adequacy ratios or any other parameters. And at the same time, the valuations are also, I would think, on par or slightly below the long term average. So I think this sector, I would think top 4 or 5 banks is what as a basket would like to have an exposure.
Okay, point taken. So that's the view coming in. And of course, the RBI governor in his, kind of statement did mention that the gap between the credit and the deposit growth is narrowing. And with that CRR boost coming in, there's going to be additional liquidity in the system to the tune of 1.16 lakh crore rupees. In fact, as we head into this short break, hear out what the RBI governor had to say about the slowdown having bottomed out.
Going forward, high-frequency indicators available so far suggest that the slowdown in domestic economic activity bottomed out in the second quarter of this year. And it has since recovered, aided by strong festive demand and pickup in rural activities. Agricultural growth is supported by healthy Kharif crop production, higher reservoir levels, and better Rabi sowing.
Absolutely flat, exactly how we started off in trade, but a bunch of buzzers out there. Delivery, for instance, you don't typically see this one moving. When you talk about online platforms, it's only a PB Fintech, Paytm, Zomato or a Swiggy you talk about, but delivery has moved up a solid 6% right now in trade. Stock holding up very well. There's MCX up higher by about 7.5%. Jubilant Foodworks has moved up 5.25% today. And then Vedanta is standing mighty tall with a good 6.5% sort of gain. Still in conversation with Sampath Reddy as well as Naresh Mirani and Kunal. Kunal, just a couple of buzzers. Delivery, Jubilant Foodworks in particular.
So I think Jubilant Foodworks is something which has given a breakout. 675 was the previous resistance for the stock. And it's a classical double bottom at play for Jubilant Foodworks. So now the stock is getting towards a break above the 700 levels, which I believe should be broken in the next couple of trading sessions, looking at the momentum as well as the setup in terms of prices. My expectation is that the stock should be heading towards 725 to 750 range over the very near term. So I think even at current terms of 690 thereabouts, it's a good level where traders could look at a buy with a potential target around the 725 to 750 range. Delivery, on the other hand, that stock is showing first signs of a recovery after weeks of price correction. So the recent swing high in the month of September for the stock was around the 440 plus mark. The stock had broken down to almost 320, 323 kind of a support zone. But I think now it's trying to claw back again. It's still yet to give signs of a confirmation in terms of moving averages breakout. So we'll maybe wait for another couple of days. If the stock sees a follow through up move or sees higher volume days for itself, then we can expect the stock to get back into a turnaround mode.
Okay, a bit of a turnaround is what one is anticipating for delivery. Of course, a fair amount of buoyancy kicking in for Jubilant Foodworks today. Sampath, where is it that you are finding value within this entire online platform category, if you will? Of course, Zomato has been the much loved story, but other than that, any opportunities you think?
Both the Zomato and Swiggy are doing quite well, and the kind of growth runway that these two companies have is quite large. Food delivery has been growing well and probably now still growing, reasonably, higher rates around 18-20%. But the quick commerce as such has picked up, additionally and growing at a very rapid pace. The interesting thing with these kind of companies is that they will keep adding new verticals to new verticals of growth that's the biggest challenge in terms of if you look at them in terms of purely in valuation, when they add an entire new set of business and which is scalable in a massive way, but that's when the people who are looking purely from a value and valuation side of it will get it wrong. I mean, go back and see Zomato and Swiggy was just as a food delivery companies. Probably they would have appeared quite expensive, but they have discovered as a new additional way of doing additional business line, which is in a quick commerce. And tomorrow, who knows, what else they will be able to, add more verticals to it. That is the biggest challenge from a, the value and valuation point of view of these platform companies. We continue, we would probably, continue to like the, these names and, stay invested in these companies because, they've become quite large, and especially Zomato, the way it has moved up, it could come into the quite a few, bit of benchmark indices as well. So we have a positive view on this particular space.
Right. In fact, many more to be joining the bandwagon. And when you talk about quick commerce, who would have thought that Myntra as well is now claiming that they're going to be delivering their products in a 30 minutes time frame. Of course, the pilot is going to start with the city of Bangalore, and then they will venture out to other metros as well. My colleague Sampath Reddy joins in with more details on what exactly is Myntra's plan when it comes to QCom.
Well, there's a new entrant into quick commerce, Myntra. It has launched its 30-minute rapid delivery service, which is called M Now in Bengaluru. Remember, the service will deliver apparel and accessories. And from Bengaluru, then, it will be expanded to Mumbai, Delhi and Pune in the months to come. It will be partnering with third parties so far as setting up of dark stores is concerned. In fact, Myntra is also looking at increasing its assortment from 10,000 items to about 1 lakh items over time. And Morgan Stanley, of course, has estimated the quick commerce market to be worth $42 billion by 2030. Perhaps that's what explains Myntra's entry into quick commerce. In fact, it's not just Myntra. Several other players have made their entry into quick commerce. In fact, venturing into fashion specifically, Myntra has shared a statement, and it says that we're truly grateful for Myntra's strong association with leading brands across the globe, which are at the center and front of catering to the evolving fashion aspirations of the country. Well, that's the word coming in from Nandita Sinha, the CEO of Myntra. Like I said, ladies and gentlemen, Flipkart piloted 10-minute delivery service called Minutes in Bengaluru. Then there was Big Basket as well that forayed into quick commerce with BB Now. There are others as well, like Reliance Retail, that's foraying into quick commerce via JioMart. And then there are car services, cab services like Ola that are exploring their entry into quick commerce with their own dark stores. So definitely this sector is all set to get heated up. There's going to be immense competition given the kind of players that are entering, that we are seeing enter into the sector.
Okay, thanks for that, Samita. But let's put the spotlight on some of the IT names as well. They're, of course, retracing today after the big rally that we have seen earlier in the week. What's your sense, Sampath, on the IT stocks?
I think the pre-COVID IT services companies were growing, much lower rate of growth, broadly in the range of about 7-8% in terms of dollar revenue growth. And the post-COVID, the revenue growth surged quite high, upwards of almost like a 20% kind of a thing. That is when these IT services company got re-rated. But I think, the growth rate is now going back to 7-8% kind of, run rate per annum. Prior to the COVID, these companies were trading when the growth rate was just about 7-8%, trading as low as a PE multiple of 15-16. And today, when the growth, as the growth rate picked up, they got re-rated big time. But now the growth is slowing back to the pre-COVID level is what I would think of, maybe slightly better than the pre-COVID level. For that reason, the way the valuation are there, which are there today, I think, they are slightly, richly valued. I would tend to be cautious on the IT services sector, especially when given the change of regime at the US. Also, one has to see how, what kind of restrictions would come in terms of H-1B visas, etc., how it will impact the demand. All of those things have to be taken into the account, and keeping the valuations in view vis-a-vis the growth rates, I would tend to be a little bit more cautious at this juncture on the IT services side.
Since we're on the subject, we just chatted with Mark Mobius and talked about tech leveraging, which really is the theme which has been topping his charts as well. But one should look at pure play IT names, or is it time to look at software and semiconductor companies as well? Hear out his thoughts.
India stocks, but particular Indian technology stocks, and more specifically, semiconductor manufacturing and companies related to semiconductor manufacturing in India. I would say, again, it's no guarantee, and I must say I'm not buying the stock yet, but a company called New Gen Software would be a good one to look at.
Okay, so Newgen Software is the stock on Mark Mobius's, Christmas shopping list per se. But on that note, Sampath, we let you go. Thanks so much for making time and speaking with us. In fact, time now to slip into a very short break. But as we do that, let's quickly take the closing trade ideas from our technical experts. Kunal, you go first.
That'll be a band Vedanta. This is a classical sign of a breakout of the the stock moving into a band from 470, 475 as a base towards 500 levels. So expecting this move to get into a more follow through up move for the stock. 540 could be a near term target for Vedanta. So that's a buy.
Vedanta is a buy coming in from Kunal. Naresh, what are you recommending on the charts today?
So that would be a buy on Tata Motors for a bounce back. The stock has crossed the 10-day high and has corrected a lot from 1150, 1200 all the way down to sub 800 levels. So expecting a bounce back here.
If you like this video, then like, share and subscribe to ET Now.